Hello everyone, welcome to the channel. Yesterday we had a clear discussion that if market opens flat or slightly gap up below the supply, then we will be shorting if we get a negative reaction, right? But market opened pretty big gap up and market was completely range bound. See, one small point I will tell you all, we can identify whether the market is going to be range bound or not. It's very simple. Take the first 15 minutes candle, okay? Mark the high and mark the low. Simple. Mark the high of the first 15 minutes candle and mark the low of the first 15 minutes candle and wait for the market till 10:30. See where the market is at 10:30. If market is between these two ranges, there are high chances market will be completely range bound. This is very simple strategy to identify whether the market is going to be range bound or it is going to be trending. You can see this happening time and time again in the past also. There was not much movement in the market when it comes to range bound. See here, till 2:15 there was no movement. After 2:15 only there was movement. We always don't trade after 2:30. That is another rule which we always have, right? Same applies everywhere. These movements are something which you can identify in the market time and time again. There was no significant closures obtained below above this or below this in this market. Same way we can avoid losses in such kind of market when we know that the market is range bound. If you go to 1 day's chart, it is very clear that we see a dodgy candle. Okay, this dodgy candle has taken a support from the previous swing point whichever market has made before going down, and market is trying to go up and market is getting pressure from the sellers. What do I mean by that? Every time whenever market opens gap up significantly, then we see that market is having a selling pressure. Market opens gap up as part of this budget session, market went down. Market opened gap up again, market came down. Market opened gap up. Every time market opens gap up, we see that the market is having selling pressure and market is coming down. This is very tough to survive in the market being an option buyer. So how we can reduce the losses is to keep the quantity size extremely small. Tomorrow it's an expiry. Make sure you reduce your quantity size as much as possible if you're trading in the current expiry, or you can trade in the next expiry. Okay, so tomorrow's trading range is going to be very simple. We're just going to mark the high, we're just going to mark the low of today's candle. Okay, if market breaks this range before 10:30, just mark range of 10:30. Before 10:30, if market breaks this range, there will be one-sided momentum, either from the downward direction. We can see the target extended all the way till 25,600 range. Okay, if market breaks 25,780, we can see 150 points movement in the downward direction. Same with upward direction, meaning if market breaks 25,920, we can see a target of close to 26,060. Again, I'm repeating, tomorrow is an expiry. Most of our major losses happen only in expiry. So reduce your quantity size as much as possible. You can make more profits in less quantity size also. You can extend the trades for tomorrow for a longer period of time. And we have noticed that there are huge imbalances also lying in the downward direction. So if market decides to go down in the coming week, there can be you can see this kind of targets which we formed as part of weekly narrative also. This was a range which we had set as part of weekly narrative. So this is where we can see the market as part of extended targets if market goes up all the way or comes down all the way. Okay, this will not happen tomorrow itself. Make sure you always capture 100 points, and after 100 points make sure you're trailing every 20 points, or every candle to candle you can start trailing. Keeping the video short, thank you so much for watching. We'll meet in the next education video.